Are you curious about the future of retail? In a world dominated by e-commerce giants and shifting consumer preferences, the retail industry is undergoing a massive transformation. Join us in this video as we explore the challenges faced by retail giants. The retail giants frequently face stiff competition from e-commerce behemoths such as Amazon, who have rocked the industry with their efficient logistics and aggressive price techniques. Smaller retailers find it even more difficult to compete with these behemoths. One of the biggest concerns for many retail companies is their expanding debt burden. Many of them have taken out large debts to expand their operations or to invest in costly real estate. However, due to diminishing sales and shifting consumer preferences, businesses have been unable to generate enough money to service their loans, resulting in financial stress and eventual collapse. Furthermore, the COVID-19 pandemic has inflicted a significant hit on the retail industry. Lockdowns, social distancing policies, and decreased consumer spending have hurt the sector, particularly companies that rely significantly on in-store foot traffic. Despite the fact that some businesses have reacted by offering online shopping or curbside pickup, many stores were unprepared for such a dramatic shift in consumer behavior. CFO Jonathan Ramsden revealed that Big Lots intends to close all of its locations in urban centers by the end of 2023, raising concerns among retail experts about the retailer's general financial health, which endured a big cash loss in 2022 and is not projected to improve this year. Americans decreased their spending at retail stores and restaurants for the second month in a row in March 2023, indicating that consumers are growing more cautious after a boom in spending in January. Retail sales fell 1% in March compared to February, a larger drop than the 0.2% loss in the previous month. The fall was driven by lower sales of automobiles, electronics, and home and garden businesses. The figures have not been adjusted for inflation, which rose only marginally that month. The drop in sales adds to other recent indicators that the economy is cooling as customers deal with rising interest rates and the effects of a year-long period of high inflation. Companies are posting fewer available positions, hiring has slowed while remaining steady, and layoffs have increased. Furthermore, economists are looking to see if banks reduce lending in the aftermath of the collapse of two significant banks in the last few months. Many smaller banks have lost deposits to larger competitors, which may push them to make fewer loans to households and companies, slowing growth even more. Here are a few examples you can take in count. Number 5. Party City. Party City, a party supply store business, filed for bankruptcy in mid-January 2023. Party City has faced escalating competition from big box and online shops, in addition to a helium scarcity in 2019, which hampered the retailer's balloon business, increased prices due to the pandemic, and an inflation-driven slowdown in consumer spending. Party City has acquired a $150 million bankruptcy loan and plans to keep operations going as it restructures its debt loan. As of the end of September 2022, the company had $1.7 billion in debt and $122 million in available liquidity. Party City may emerge from bankruptcy with a considerably smaller physical footprint. Number 4. Stop & Shop. The popular regional grocery chain Stop & Shop is shaking things up by closing some of its stores that didn't meet their financial expectations. Best Life recently reported that a few locations in New Jersey and Brooklyn, New York had to bid farewell since January. Local officials are now in a frenzy, eagerly searching for a new supermarket tenant to fill the void in these areas. Surprisingly, there are no other grocery chains currently interested in taking over these sites. These closures are happening amidst reports of sluggish sales and worsening financial conditions in the industry. Number 3. Big Lots. The Big Lots is known for providing an extensive range of merchandise across various categories, from furniture and upholstery to mattresses and ready-to-assemble items. However, despite their incredible product lineup, Big Lots has hit a bit of a rough patch. Sales have taken a hit with a significant 10% drop, which is surprising given consumers' constant search for bargains and affordable prices. With 1,425 locations across 48 states, the company is facing a challenging situation. Unfortunately, hundreds of their stores have become unprofitable, putting them at risk of disappearing from the retail landscape soon. To add to the struggle, Big Lots recently posted a staggering net loss of $210.7 million, equivalent to $7.30 per share. It's clear that tough decisions lie ahead, and loyal customers may soon have to bid farewell to their favorite Big Lots stores in the coming months. Number 2. Amazon Fresh. Amazon Fresh is also cutting costs as its grocery retail business disappoints yet another year. As a result, the retail giant is closing multiple Amazon Go convenience stores and Amazon Fresh locations and will cease operations of new branches. The company does not see a future for its cashierless grocery stores and is withdrawing from the segment as it focuses on building a larger market share through Whole Foods, which has over 500 stores still standing. Last month, a handful of Amazon Fresh stores were left vacant, according to the information reported, as it turns out the downfall of both chains will arrive sooner than anyone anticipated. Number 1. Kirkland. Get ready for a roller coaster. Kirkland, a home decor and furniture retailer, is experiencing some serious turbulence with the unfolding recession. Seeking Alpha analysts have taken note of the shaky fundamentals, revealing a significant decline in total revenue from $634.12 million to $558.18 million over the past 3 years. Generating revenues and profits has become a major struggle for Kirkland. In the past quarter, they reported disappointing earnings with sales, gross margin, and earnings all taking massive hits, especially in durable goods like furniture. It seems that consumption and manufacturing have both taken a nosedive during the recessionary times, posing significant threats to Kirkland's future, as emphasized by the analysts. In fact, they've given Kirkland stock a sell rating. With weak snow traffic and rising costs adding to the company's woes, Kirkland's shares have plummeted a staggering 32% in the past 3 months. Unfortunately, the outlook for a rebound in 2023 looks bleak. It's a challenging situation for sure. So, what are your thoughts on it? If you found this video informative, please don't forget to give it a thumbs up and subscribe to our channel for more thought-provoking and informative content like this. And remember, knowledge is power, so stay informed and stay ahead.